All right, today I'm just going to do a short video on the stock market. Unfortunately, I don't have any spots open for the SMT at the moment. You can email me and get on the waiting list if you want. Maybe something will open up this weekend. Anyway, we've seen a lot of people. There are a lot of analysts, predicting massive crashes coming in the stock market, and I tried to warn people back here in November when the Dow made a higher high above this August peak. This was a Dow theory non-confirmation. So the Dow made a higher high, but the transports didn't. But it was a warning sign that maybe this phase of the bear market was over. If we were still mired in a bear market, you would not expect to see really any of the indexes make higher intermediate highs. That's usually a sign of a market that's in the advancing phase of a bull phase. So this was a warning sign to the shorts that you needed to probably get off of the bear market thesis and at least be open to the idea that the bull market was back on. And I've been pretty adamant all along that we weren't in a secular bear market. The bull market that started in 2009 is still intact, and we still don't have a completed bubble phase. So the bull market, the top of the bull market, is still out in the future somewhere. And this was just a really severe correction down into what I think is probably a half 4-year cycle low. So at the time I said, this was a warning sign that maybe the bear market was over. You need to quit listening to the people predicting that we're going to have a crash that's going to take stocks down 50, 60, 80%. That's just not going to happen, not yet anyway. And I said at the time, you need to watch the transports. If they confirm, then that is your confirmation that the bear market would be over. So now let me go to the chart of the transports. All right, so here are the transports. Here is that August high. This is an intermediate high. We don't actually have a Dow theory confirmation just yet. We have to have a closing high above the previous closing high, and we tested it yesterday, but we haven't actually closed above it. So the Dow theory buy signal hasn't triggered just yet, but you can see it's just the blink of an eye away. If we get any kind of rally today or tomorrow that closes above this August high, then we will have a Dow theory buy signal, and that would be the confirmation that this cyclical bear market is over for now. And then we would, at that point, start to, or we wouldn't anticipate another bear market until we get into the timing band for the next 4-year cycle low, which isn't until 2024. And it could even stretch out to maybe into early 2025. But anyway, pay attention here. Quit listening to the people that are, predicting that the stocks are going to crash 50, 60%. The market has been, it warned us back in November that maybe the bear market was over, and when the Dow made that higher high, and now the transports are, within, like I said, within just a hair of confirming that this stage of the cyclical bear market is over, and we're in another bull market. And this, and people, are, finding all kinds of reasons for why the bear isn't over, and what they're overlooking is that the dollar has topped. So, what is driving this is is that the dollar has rolled over. Probably the Fed is either offsetting QT, or they're doing shadow QE kind of under the radar. They've allowed the dollar to top. I see a lot of people suggesting that the Fed wants stocks to go down, which has just been, I never understood the reasoning behind that. No government wants their stock market to crash. All the Fed wanted was for inflation to come in. And if that meant that the stock market had to be pulled down along with commodities, then so be it. They were willing to risk that, but they didn't actually want the stock market to crash. Ideally, they would like the stock market to stay up and commodities to crash. But they got, a little bit of both. Stocks went down and commodities came down. So they've somewhat succeeded in bringing down inflation, and the pain in the stock market and the risk of recession was enough that it forced the Fed to stop. They ended the aggressive phase of the rate hiking cycle. They went to 50 basis points during the previous meeting, and then of course they went 25 points at the last meeting, and they're not going to just turn and start increasing the rate hikes again. So they're on their way to a pause, and the dollar is signaling that, has been signaling that for a couple of months, but people for some reason have been ignoring it, and that's what's driving the bull market in stocks. And it's probably, it's definitely put in the 8-year cycle low in gold, and maybe we've completed the 3-year cycle low in the commodities. Hard to say. We've got to move down at some point here in stocks, and let me switch this back to the transports or the industrials. All right, so we've got to move. Like, this intermediate cycle is getting pretty mature. So at some point here, I expect fairly soon we'll get a minor correction down into a daily cycle low, and then we'll start a third daily cycle that'll rally. Maybe on the S&P, I think we'll make a higher high. We might make a higher high in the Dow as well. But then we'll have probably a pretty severe move down into an intermediate and yearly cycle low that might even come back down to test these lows. I don't think it'll break these lows, but it might come down to test it. And that could potentially drag the CRB down into a final 3-year cycle low if it hasn't already completed that. So we've got to be aware that is coming here in the probably in March, maybe into mid-April. We'll get that severe correction, and that'll be the buying opportunity for stocks. It's a little late to be buying now. We're due for a move into a daily cycle low here at some point. That's usually a 4 to 8 day correction, and then a rally that's going to not succeed in going very far, and will left translate, and then we'll start that very severe move down into the yearly cycle low. So there's no trade really in stocks, other than a very short-term trade when we get a daily cycle low. But there's no real good setup for stocks probably until March or April. We're, as I've been saying in the SMT newsletter, we're waiting for that first correction in gold before we want to get somewhat aggressive again. But gold will probably get dragged down in that March and April time frame as well. And oil may make a lower low, and the CRB may make a lower low and complete that 3-year cycle low then. So we're just kind of in a cautionary phase right now. We're still holding our metal positions, but we're waiting for a correction before we want to get aggressive again. We don't really want to do anything with oil or stocks until we get that move into the yearly cycle low later this spring. So again, no opening for the S&T right at the moment, but you can email me and get on the waiting list, and I'll notify you as soon as an opening pops up.